changing the way we've been trading, changing the energy mix, and therefore also the way of trading, also the time and the speed of trading. Sorry, zu weit. Nichts passiert. So. And not only on the electricity side, think about the discussion about green gas. We are thinking about biomethane inserted in the grid, or on the other side, even hydrogen, green, blue, black hydrogen as a new trend. And last but not least, we have a new market reality. This new market reality means, on one hand, on the demand side, we have a so-called sustainable generation. People who want to know where their energy comes from, where it was produced. They don't want to just have transparency, but also they want to have the choice. On the other side, we have also new market actors. Think about portfolio managers, aggregators, people who are now entering the market, who haven't been there before. And last but not least, there is a real certificate market growing up. And if you ask me now, does origin really make the difference? I can say under these circumstances, yes, the origin makes the difference. So maybe let's have a closer look to the first driver, the new regulations. What are the main trends we see from the now new regulations which are coming up? First of all, unfortunately, certain parts of the regulations still remain on a national competence area. It means we won't have 100% same product tradable all over Europe. There is still national competence about, for example, validity time, about countries which are accepted. But yes, at least a main bulk is already tradable. The second trend is that also the support schemes should be market-based. Unfortunately, according to the new regulation, nothing yet has been already done, but we have the old example of the L certificates in the Nordic regions, or even in Austria, there is a system which one could compare with market-based. What we can see is already today that supported GOs, which till now were simply not issued, are today brought to the market. Just think about the Italian market, which has last September, they brought some 8 terawatt to the market in an auction system and changed quite the value of the existing price levels. Another thing is we see that it goes towards more and more disclosure, meaning showing really all the origin, the complete origin of the energy which is applied to end consumers. We see already today, we have it in Austria, we have it in Switzerland. Most probably the Netherlands will join next year, not so sure. But at least we see also other countries which are allowing also now GOs, not only from renewable sources, but also from fossil or nuclear sources to be established. So also this is a sign, the first step towards full disclosure. And last but not least, because I was talking just about electricity, also the RED II directive is also talking about using the guarantees of origin as a mean to disclose gas. And this is something completely new. And we will also wait for the gas directive. So maybe let's have a brief look at the driver number 2, which was the basic, the generation as it developed. And if you see, only the wind and the PV is likely to triple. If you see where we are today, it's likely to triple until 2040. And if we have a look about the peak load, we see that mid of next decade, it should even be more than the average peak load. And last but not least, the market. We see that there is a permanently rising demand on the GO, of these traded GOs. We have seen last year, this is until the end of 2017. 2017, you see we have had some 400 terawatt certificates already issued. Out of this, some 95% are renewables. And out of these renewables, to give you a feeling, 60% is hydro and 20% is wind. And you see also the supply side, which has risen notably due to, for example, as I said, some supported certificates now joining the market, but also due to the fact that it's not just renewable, but there are not all the supplied or the issued GOs are actually consumed today, not necessarily. But what was the effect on the market? In fact, this year we have seen an incredible increase in this market. From the start of this year on, especially until August this year, or first days of September, we have had nearly 600% of plus. We started more or less 1 year ago. We were at some 25 cents. Last August, we were at €2.50. Now, let's say it went back, but it's rising again. So you see it's getting more volatile, much more than it was in the past. And not only that, such an issue also brings development brings additional issues. Think about risk management. It's not the certificate without any value, but trading something, a net value of €2.50 and trading hundreds of megawatts is really becoming a credit issue. And most of the companies working in this sector were not prepared. Another point was there was a request about the possibility of agreements which foresee netting. Not only the monthly netting, but also in the worst case, a closeout netting in the worst case. And also there is the request of exchanges. Why don't they do clearing? Is this already getting a commodity? Are GOs and renewable products in general commodities? I think there is a very nice model showing the market development, a market starting with a bilateral deal between producer and consumer, then traders entering and also to bring over time more liquidity into it. Then you reach a real OTC market with even brokers entering. Sometimes you have then the possibility to trade across screens, and then you have the highest level or the highest development of a really traded, exchange-traded market. And what we see about this is the following picture. We see that in electricity or the Nordic electricity certificates, or even in the EUAs, we see that there is already a fully developed commodity market. On other products, like the carbon offset, especially the voluntary carbon offset, so like VRs, CRs, as well as the guarantees of origin, until today the market is developed, but it's still stuck at an OTC level. There are some platforms under construction, but it's not so much yet accepted by the market. And the EX, in fact, the exchanges in this case were very early there, but for example, EX stopped trading last year. But nevertheless, we think that this development may be rethought or changed because simply the market will ask it. So one thing I also wanted to mention when talking about guarantees of origin, yes, I was talking about electricity and I was talking mainly about renewables. But please don't forget, there are also guarantees of origin which are regarding fossil and nuclear. And on the other side, we have also on the gas side. This is quite a brand new topic. The declaration of gas. And on one hand, if we are talking about green gas, of course, we have biomethane, though the quantities are very limited because we are talking not just generally about biogas, but really about the gas which has more or less the same quality as the normal thermal gas. And maybe in the future, hydrogen. And the moment we have green electricity, green hydrogen, we very soon come to the discussion of sector coupling, power to gas, gas to power, power to liquid, even going down to all the value chain. And here we are again in the middle of the energy transformation process. And last but not least, is this development sustainable? What are the trends we are seeing today? We have something very special in Germany. They have now regional products that grant you that your electricity comes from a radius not more than 50 kilometers. So you see the power plant, which energy you are consuming. On the other side, you see exactly the opposite. You see that there are especially industries which are very much, let's say, considering sustainability. They don't want just to be green in their home markets. They want to be sustainable wherever they produce. And if you are talking to some multinational multi-sites, they are starting going global, though the system of this certification varies, but it's already covering large parts of the world. And then there is another, I think, for the time being, the most sexiest trend, the so-called the PPA, Power Purchase Agreement, or as I call it, the do-it-yourself, where in theory it would be thought between end consumer and a product developer, but usually you have at least a portfolio manager or somebody in between to help, because energy is not so easy. And the question, of course, is what these are very customer-oriented trends. What has this to do with electricity trading? And the question is, yes, many trends started as electricity trading, as customer trends, but sooner or later they will also reach the electricity trading. Thank you.
So, ladies and gentlemen, do we have questions for Regina? If you do, please just put your hand up and I'll get you a microphone. Do we have anything you'd like? Yes? Okay.
Excuse me.
Okay.
Wasn't there, even though there wasn't there a ball too?
Yeah, sorry. Okay.
I didn't see it.
I use the big one.
Is it better?
Just a moment, I don't know that it's on.
Excuse me, maybe we'll continue with the microphones.
Okay, sorry for that. You hear me now? Yeah? Okay. So I'm Daniel from Win Europe. I was just wondering whether you could develop a bit more on one of your first charts about the supply and the demand of GOs and why there is such a low demand for GOs.
You know,
consumer perception and how do you think we can fix that also from a regulatory point of view?
To be frank, I see it exactly the opposite way around. I do not see there is a low demand. I see, on the contrary, it's much easier, or in some countries, GOs are automatically produced. So every single megawatt hour produced in physical electricity also produces GO, which then may be of different types. And not always has there been the request for it, the demand. And I see it on the contrary, there was a offer of these GOs and there was a request. And of course, additional requests is pushing additional demand. And to be frank, I'm quite curious to see the outcome of this year, because as I have shown you that the prices were extremely high, we have seen on the market for a first time an extreme request for fossil or even nuclear. Let's say I'm Austrian, so here nuclear is a no-go. But what I've heard from the colleagues, that these, let's say, cheaper GOs were requested. Because simply for certain customers who wanted to show 100%, this was especially gas. And there were many additional power plants asking to also be able to issue GOs. And therefore, I think the demand is something which is growing. If you see, I have shown you just the 10 years, but it's really something we've been seeing for the last 15, 18 years, permanently growing. And of course, this growing demand is always requesting more and more supply, and everybody who can supply something is there. But as I said, it's not everything comes to the market. there are also some of the issue GOs were not really sold, or were sold. For example, we have in Austria a system where the GOs are attributed to the distributor. So in theory, the distributor could give it for free to their customers, saying the customers had paid a certain percentage, and so they get it. But we have heard from our issuing body that there was many, especially smaller regional companies, did not even request it. So it was issued, but nobody was, they were not thinking to give it to their usual consumers. And I think this is what you see, this difference, which is some 150 tera approximately difference. I think this is just a sum of the different between the qualities, this supported, not really entered, issued, but not really brought to the market, or these, let's say, many special things. And let's say, of course, being from Wind Europe, I agree. I would also like the demand shifted even more. And other questions?
I'm going to try. Oh, it does work. Good. Okay, let's use this.
Hi, my name is Nora. I work for Montel. I was wondering, you were mentioning how GOs are now maybe breaking into a commodities sort of state. But what do you think is needed now to take that step? Is it something that you would like to see? Is it something that's preferable? It wasn't quite clear.
To be frank, I've heard or I've seen a similar model presented some 7 years ago at one of the REX conferences, which is really a specialized conference on these certificates. And it was from the Italian exchange. And it was the vision. And of course, 6 years ago, all the exchanges wanted to enter in this business. But I think it takes also time for the markets to develop. And this is especially a product which is really something which has much to do with trust. It's not like electricity or gas, something you really see, you get. This is a certificate where the consumers have to get used to it, have to see that also their, let's say, the distributors, that their consumer accepting it. It's something which has to develop. And I think that the exchanges and now, there is also due to the regulation, which is to a certain part still very special. So you can say, I need a GOO for this region or for this country, or we have some requests from small power plants, from new power plants. So very special requests for very special labels. Think about also the let's say the state labels, like there was in the former times the Lex in the UK or the FIT, which is now where you have very concrete requests. And let's say the bulk, I call it under parentheses, the bulk which is necessary to create a market is what's still something under discussion. And in fact, we have a kind of unofficial working group between brokers and traders to somehow try to define an underlying. Something Reuters or Bloomberg would also take as a reference product and reference price. And I think this is what it at the end needs, to have just on the exchanges this bulk product and to leave all the other special products for the many, I call it originator or product manager, which are then really making out of it very special products. It's okay.
So, Regina, thanks very much. I'm just going to add a comment, which is that the prices that you talked about and the volumes and that 600% increase have staggered me, actually. So you will know that I haven't seen this going on for just a little while, but as the back office manager that I used to be, I'd now be treating these as cash. And the control that I would put around the process for handling all of this would be something quite different to the control that I had 4 or 5 years ago in this business area. Real value, and it's got to be controlled, but very interesting and a bit of an eye-opener for me. So thanks very much. Thanks, Regina.
Thank you very much.
So, ladies and gentlemen, I'm now going to ask Tim Borsche to come and join us from Priogen, a trading company based in Amsterdam. And you're going to be talking, I think, about shaping services and the issues the issues good and bad in that area. So, Tim,
Yes,
thank you.
indeed. Thank you very much, Gavin. Do I need to do something as well?
You just
or?
need to... sorry, I don't know why I'm talking to that. It's that one, isn't it? You just need to do that. And there's a clicker there.
Perfect. Thank you very much. Thank you all for your time. My name is Tim Brewerson. I'm going to give us a short presentation on shaping services in the power market. Not entirely sure whom of you know what shaping services are, but I would like to have a bridge to the presentation of Regina in regards the do-it-yourself. But let me start with a brief introduction of Priogen, as it's obliged by my senior management. But basically, we are a company based in Amsterdam, and we trade power, physical power. We started off in proprietary trading, and since the start of this year, we also have wind and solar parks under our management, which we have through PPAs, power purchase agreements. But what we do on the power side is we take positions on our, these are nice words made by a media specialist at our company, a fundamental price forecasting model. Basically, we try to come up with a forecast of where the short-term power, the day-ahead power price will auction at. So we take a position before the auction, and either we run it into the auction or we close the position at forehand. That's our main bulk of revenues. We also are in gas trading, PPAs, virtual power plants, and forecasting services, etc., etc., etc. But if you have any questions on our services, please contact me by email. I can tell you much more about that. But increasing risks for shaping services. Shaping services. If you have a PPA, or if you buy renewable power, you basically buy a profile that fluctuates. That a windmill can be off, can be on. The wind can be there. It can be a cloudy day, sunny day, or what. So a shaping service is more or less shaping renewable energy output into either a base load or into a consumption profile. Sounds pretty easy, but in reality, it's not that easy. And you can also shape them from the forecasted hours. If you go to the TSO, you need to forecast on an hourly basis. However, production is done on a PTE basis. Sorry, PTE is Dutch, PTU is the English abbreviation. So those are basically the three shapes that you can offer in the market. However, if you have more renewables in the system, you also have higher volatility, because when it's windy, you are producing wind, and your neighbor is also producing wind. And due to the low variable costs, basically you can run a windmill until eternity, or until negative prices sometimes if you want to. But I'm not going to dive into that one. But overall, you will see lower energy prices as more renewables come into play. One of the topics that when I made the presentation was, what about price floor risks that we currently have, at least in the Dutch subsidy scheme. Currently, that's not much of a thing, because currently the power prices are at 50, 60 euros per megawatt hour. However, 2 years ago, they were at 24-ish, 22-ish, and with a price floor of 20 euros, that was a bit tricky. But actually, no player wants to touch the the price floor risk. However, with these prices, as I said, it's nothing really to think of. But it's something to keep in mind. And on the investment side, if you have a wind park or a solar park, you're investing quite some capital in it. You want to have an understanding of what your revenues will be for the next 10 years. However, with low prices, volatile prices, even negative prices, it's hard to calculate and to value all the revenues coming from your wind or solar park. And especially on the impact of what we're seeing today in the Dutch. I'm Dutch, so that's why I keep on referring to the Dutch market. But the Dutch market, but also the Portuguese market, Portuguese solar market, subsidy-free projects. In the Dutch wind park, big one, wind at sea, subsidy-free. What will that do to the revenue streams or the income streams of investors? Insecurity leads to lesser investments or lower investments. So that's also something to take into account. And also, from a valuation point of view, not all meteorology, or it's a tongue breaker, excuse my language, but not all years are the same. You can have a harsh winter, but all valuations are done based on historical pricing. I'm not saying there's something against it, but it's something that you have to keep in account, especially when valuing PPAs. And also with increasing volatility, of course, credit and counterparty risk will also increase. Well, that's quite standard, I would say. However, I'm not sure if anyone, I'm not going to ask you the question because then I run the risk that no one will raise his hand. And so that's why I'm not going to ask you the question. But there is a cannibalization effect in wind and solar, especially in wind. So I placed a question mark. What is the cannibalization effect? As I said, if it's windy and your wind park is producing power, your neighbor is also producing power, etc., 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 at low variable costs. Basically, you are cannibalizing on the price levels of power. So when it's really windy, you have low power, meaning also lower revenues. That's something that you don't want to have. So the cannibalization effect is real already in the power market. However, what are the consequences? Consequences are that the short-term power prices will be even more volatile. So there will be more emphasis on short-term trading, more focus on forecasting and meteo. At Priogen, I'm just gonna be a bit informative on this. We have, out of my 49 colleagues, we have 7 meteorologists. So our focus is really on weather, renewable energy. Forecasting is essential. Being up to date on meteo data and having experienced and knowledgeable meteorologists is important, essential. Thank you very much, Gavin. However, if you now have a PPA, you'll get basically a reference price. It used to be a yearly index tracker. Now it's basically the daily or the day-ahead EPEX price with a discount for all the shaping, the imbalance costs that are part of it. But what you'll see with a high volatility is that the discount will also increase. And I'm not saying that the discount is actually profit towards trading companies. No, it's basically a valuation of the risks that we run. A lot of industrial companies, they believe that the discount that we ask is basically our profit. I just want to make it clear that's not the case. Excuse me. However, what you also have, if you're off on the, sorry for this. If you're off, as I had said earlier, if you have more focus on forecasting and meteo, if you're off on your forecasting, if your forecasting is not correct, you'll have higher imbalance costs. And imbalance prices, as many of you probably know, can be much higher than the wholesale power prices. Wholesale power prices currently 50, 70 euros per megawatt hours. Imbalance prices up to 300, 400 euros per megawatt hour per PTU. So it's a cost aspect. However, it can also be a revenue. If you think that you can have a forecasting model on imbalance prices, you can actually try to make a position on the imbalance prices by using the forecast and your submissions toward the TSO to actually make money on the imbalance. Risky, however, the trend is there. More and more companies are looking at it to see if they can actually make money out of imbalance and not losing money on the imbalance. How to deal with these risks? Because, as I said, these risks are real, and we're talking about quite some money, and we're also talking about more demand from industrials entering the PPA markets. So the market is increasing, but as I said, the risks are there of higher or lower prices and higher volatility. I don't have all the answers to this. I'm just a guy standing on the stage and without a glass ball sitting on the beach. But one of the things that you can do is store the power. Storage can be a solution. However, you also have something like the cannibalization effect of storage. You see that with the frequency control reserve prices in the Netherlands, they're coming off. Okay, they're going to stabilize in the future, But are they going? People are saying they will go up again, but who knows? But it also means the more storage you put into play, the lower prices you will have as well, meaning lower revenues in the end for your investments. So either the costs for storage needs to go down, or the prices or the prices in general needs to go up again. Nevertheless, prices are coming off on storage, but is it enough? I don't know, to be fair. Curtailment. I took a picture of a broken windmill because that was basically the only funny picture I could find on the internet regarding curtailment. It's an option. It happens. Negative pricing. No one wants to be hit by negative pricing. However, in my personal view, it's a bit weird to have wind parks at sea or on shore or solar parks that are producing at a low variable cost, and then suddenly you'll say, you know what? I'm not going to make any money on my gas plant. So can you please shut down the windmill? For me, it's a bit hard to match. But reality is there is curtailment. Is it the main solution? I don't think so. Smart grids. Looking around on the fair, walking around, you see a lot of people interested in smart grids. I also believe that it is a way forward. Is it how to say, the holy grail? I think perhaps in the future, yes, on a short or what's the time frame? 5 to 10 years. I don't believe that it will have a major impact in 5 years, perhaps in 10 years. But on the other hand, please prove me wrong, because that also means that when smart grids are out there and are making money and creating money, we as a Priogen are interested in as well. So please prove me wrong. But so far, it's still a theory and not a practice yet, in my view. Still pilots. Interconnections, yes, it can help. On the other hand, if all countries are basically doing the same, then interconnections don't really help. But perhaps my colleague of Enedis can answer that question later on. But I'm not going to put you in now. But it is something, as I said, I don't have all the answers either as well. I'm just naming that these risks are there. And system-friendly wind turbines that are more efficient, smaller, that you can use on lower wind speeds as well. As I said, more efficient. However, is it feasible? Is it viable? Can you actually make money out of it? So far, but perhaps the person from Wind Energy Europe can say a bit more on the system-friendly wind turbines. I hope so. But nevertheless, so far, there is no one single answer to all these questions. However, the final remark that I do have is, will renewable energy be the victim of its own success due to the cannibalization effect? Or will the market find a way to address all these issues? I don't know, but if any of you has a solution, please let me know. Thank you for your time.
So, do we have any questions for Tim? I've got the very catchy ice bucket ready for any of you. Daniel.
Okay, I don't have a question directly, but maybe a comment to your question on the solutions. I think one solution you were missing on your picture is the one on sector coupling. It's a combination of storage, but also of demand-side response. And I think if you find new applications outside of the power sector that will require the electricity from variable renewables, then you have a potential golden mine there. And that would help.
True. Demand-side response, or I try to cover that, but in the not in the Cannibals 2 picture though, but in the smart grids. Because demand-side response is also highly connected with smart grids. You need to know when to stop the production or when to lower the production, etc., etc. But you're right, it is possible. In theory, you still see the demand response side making money. However, is there also a cannibalization effect on the demand response side? Income streams are getting smaller on that side as well. Yeah, it used to be a golden ticket to make money, but these days it's much more cumbersome. But you're right, smart grids in combination with demand response is absolutely a way forward. But it's also an impact on the processes of industrials. And a lot of times they're not even realizing what impact it has on the production side. Because first of all, an industrial wants to produce its products. And as an add-on, it wants to utilize or optimize its position in the power market. However, the main goal will be producing their product. If you have a gas operating plant, you produce gas. You have power as a side product. It can be an interesting and profitable side product, but reality is it is a gas plant producing gas. Typical, yeah.
But in the case of hydrogen production,
Yeah.
because it's so from electrolysis, because it's so highly dependent on the electricity prices, it may make a business case for them only to produce hydrogen when the prices are very, very low. So when you have a big amount of renewable.
I only heard the first part, but so you're saying that hydrogen relates to the power prices, absolutely, and then I missed it. Sorry.
So instead, because it's so dependent on the electricity price, that eventually people who will produce hydrogen in a distributed way, they could be relying on only very low electricity prices to produce that hydrogen. So they will solve the issue of oversupply or curtailment and
True.
It's a long term. It's a long term. Yeah.
True, but it's good how you addressed it, because hydrogen is not a fuel as gas is, or coal, or any other. Or as far as I understood it, it's basically a method of transportation of the energy itself. But yeah, you can, in theory, hydrogen is a way forward. However, yeah, it's quite costly at this moment. And at Priogen, and personally as well, I believe more in more short-term, as we trade. It's quite funny actually, but as we trade on short-term basis, yeah, we try to come up with a solution that are actually usable in the short term. But yeah, for sure, hydrogen, absolutely. But is that feasible? And so I always ask myself the question: is that feasible in the next 5 years? I have my doubts. Small scale, perhaps. Large scale, no. But yeah, you're right on that. Just yeah.
So Tim, I've got a thought, which is, firstly, that I've got 3 sons and I'm going to tell them all to go and become meteorologists. It's clearly the way forward for many. But actually, on another topic, you mentioned imbalance. And some companies are trying to make money out of imbalance. Now, that's just a little lost on me. I thought you lost money if you were long and you lost money if you were short. You were incentivized to balance. So how does that work?
In some countries, you have dual pricing on the imbalance. So basically, actually, you can also make money on if you've sold on a day ahead, not the entire forecast, to put it that way. You have, but you produce, and then you can basically make money on the imbalance side. It's not as easy as people think.
And you're guessing which way the imbalance will be out,
yeah,
and therefore going long or short.
Basically, what we have at Priogen is basically a model that predicts the imbalance prices in the Netherlands, and it basically doesn't predict them on an absolute level, saying that so we have 2 models. The day ahead model spits out a price, to say it like that, spits out a price where the auction will clear. It's an absolute number. However, the imbalance model doesn't spit out an absolute number or figure. It spits out if the imbalance prices will be higher or lower than the day ahead prices. And in that perspective, or in that view, or in that line, you can make money. So it's, yeah.
Okay, I understand where you're coming from now. I hadn't followed, but Harry.
Well, Tim, just to follow up on that question, a lot of imbalance is caused by, for example, unforeseen events like this outage of a power station.
Yeah.
How do you forecast that?
No, no, we don't. No, you can't forecast outages, unfortunately. However, Remit, when Remit came into play, it helped us a lot, or it helped independent power traders a lot. because in theory all the information is public on outages. However, it's always in hindsight. You never know that in advance. But it's a risk. It's a risk that we are willing to take. We consider ourselves as risk takers, and yeah. It happens. You can calculate how many times on an average basis an outages will occur, and those are the things that we keep in mind. But on last Thursday in the last Thursday in the Netherlands. Yeah, there was a failure on the IT platform of the TSO, in combination with an outage. Yeah, that meant that the imbalance prices soared until 300 euros per megawatt hours. We lost quite some money on it, but yeah, that's how a short-term power trading company works. Yeah, we know that we don't make money every day, but our accuracy rate is more than 75% nowadays. So we know that 3 out of 4 trades are profitable. One trade is not profitable, but yeah, that's our loss. It's a risk, absolutely. So some risks you can mitigate, but some risks you have to validate, and yeah, take the hit.
Okay, Tim, thanks very much. Thanks very much. And so, Daniel, yes, would you like to come up? So Daniel from Wind Europe. Got a clicker there. You've got handheld if you want it. And over to you.
Okay, good afternoon to everyone from my side. It's for me the first time I'm doing such a kind of speech with headphones, so I hope it goes well. It was also difficult to guess or to foresee which kind of audience and the level of understanding and so on the topic, so we'll try. We'll make our best. I'm not a trading specialist like the previous speaker, so I'm more like on the regulatory side. I'm sitting in Brussels. I work for the European lobby representing the wind industry, and more particularly on system integration. But I will do my best to try to cover some of the trading topics. Yeah. Before we go into trading, just very shortly who we are. So we are an association. We represent 450 companies today in Europe. We are representing the whole value chain: manufacturing, developers, utilities, financial sector, research, and so on. So we're basically a very large group of people, and we are around 55 employees sitting in Brussels. A bit of introduction on the wind market for those of you who are not familiar with. So basically, we have around 180 gigas of installed capacity by the end of June this year. Mostly distributed in 3-4 countries, so Germany, Spain, the UK, and France in terms of volume. But if you look at the share in the energy mix, it's quite different. And then you can see that countries such as Ireland, Portugal, Spain, and Denmark have a much higher rates of share, and that's therefore it's quite much more interesting markets to look at in terms of how to manage that variable renewables and also how to integrate them in the market as well. Oh, I didn't expect the animations. So this is a chart actually which was presented by the IEA recently, one of our annual events. This is the power mix or the energy mix until 2040, how the International Energy Agency sees it coming. And they see that wind will be the first source of generation shortly after 2025, 2027, and so on. So this is quite impressive. It's not us saying that, so that's interesting to see others also predicting this kind of developments. But we also have our own scenarios, of course. We look until 2030, and we see that we are going to go from a 12% share of wind today up to 28, 30% by 2030. And if you look at the share of wind in different markets, there are some remarkable observations. Like if you look at Denmark, for instance, where you will have around 70% or more of the electricity will be wind. And okay, you say Denmark is quite a well-interconnected country. You have a lot of, very well integrated in Central Europe, so it might not be so difficult. But still, if you go to Ireland, which is an electrical island, and there you see also shares which are going to be above 60%, that's a big challenge for the system operator. And it will have a big impact also on prices in the market, on trading strategies, on how to mitigate all these risks Tim was talking about before, about all the price risks and volume risks. Okay, so that was a bit about the introduction of on wind on the market very shortly. Now I'm going to talk about 4 topics, and they are a bit linked to trading, but it's also about how you need to shape your market so that you have a good environment for renewables. Yeah. So we did a project a couple of years ago with a number of partners from research, and we came up with these 4 overarching, let's say, recommendations, which basically your market needs to be faster, and I will go into the details. What do we mean with that? They need to be larger. They have to have shorter products, and they have to have an efficient pricing. Yeah, and I think these are overarching principles that you can apply to all type of markets. So we're talking about day ahead, we're talking about intraday. You could also apply that to balancing as well. So this is you cannot replicate them very well across the board. If I go into the first one, which is faster markets, well, what I mean here is shorter lead times. Yeah. Previous speaker was talking about the importance. I mean, all the methodologies on your company. Yeah, of course, this is crucial for this technology. If you see the different lines here, this doesn't point here on the screen, but if you see from the above, just going down, this is the improvement of forecasting year on year. So every year they are getting better and understanding how wind resources are going to be. But also, if you look into the horizontal axis, this is closer to real time. So the closer you get to the real time, the lower your error. That's obvious, right? But it's quite important to see that there is a huge improvement in the last 3 or 4 hours. So it's not the same to close your position 3 hours before real time than to close it 1 hour before real time. And here we're talking about big errors. We're talking about big money. If you need to consider these big imbalance prices you were mentioning, which would say 300, 400, but in Belgium, it's a small country today, you can go up to 4,000 euros. They are removing the cap up to 13,000 euros. And if you're such a short country and you have very little possibility to trade, and if you are short or you have to buy energy or you are large, I mean, it's really problematic. So very important. You know, we need to be able to allow the market to trade very close to real time. If we look at how the markets are in Europe today, and here I take an example of the intraday market, you have different models. So you have the model of auctions in Portugal, Spain, and Italy, where you only have discrete trading, discrete auctions, which happen the day before and during the day at certain times. Then you have the continuous trading, so the normal trading, yeah, which are the green countries. Most of Europe is in that situation. And then you have the hybrid, which is basically adopted in Germany, Austria, and Slovenia. Finally, you have a number of countries in Southeast Europe that they still don't have an intraday market. So if you're thinking about bringing out of renewables and bringing out of volatility, but you don't allow the market players to trade closer to real time, they are screwed. Either you accept them from responsibilities, or they are going to run into big losses, so they're not going to be willing to invest. So that's very important to take into account. And if we look more concretely on this intraday market, and we look at the gate closure time, so meaning this is the time at the last moment in time at which you can adjust your position, you can see that so the country, like the numbers in green, so these are minutes, yeah. So 20 minutes before before time in the UK, 5 minutes in Belgium and the Netherlands. Many countries are half an hour, so it's good. These are good timings. But then you have a number of countries which are still in an hour, yeah. In an hour or even larger times, so like 2 hours before time. And if you look at Spain, Portugal, and Italy, as I said, these are auctions. And so if the auction is closing at 2 o'clock, it's good for the 2, 3, 4 o'clock, but it's not good anymore for the later period. So the number of closing times or auctions is quite important during the day. In Poland, you have an intraday market, but you have one single auction during the day at 3 o'clock. So what's your position at 10 or 11 o'clock in the night? I mean, you need to establish it then, and then you have a larger risk of making it wrong. Okay. And just to say that it's a number of actors talking about this and saying, well, if you are able to harmonize intraday markets, you can also reap a lot of benefits. You will need to activate less balancing resources or replacement reserves, and you will run into less curtailments, yeah, because you are able to trade more close to real time. Okay, that was the first one. I'm going now to the second. Why do we need larger markets? So this is a chart which was developed a couple of years ago. This is a simulation. There are plenty of that out there, so I'm sure you have seen such things. At the back, you see it's like a simulation of a small region, like 2 per 2 kilometers, and this is wind variability in 2030. And what you can see is a lot of volatility because a small region, either there's wind blowing or not. So you have that. Very, very strong ramps, and you need to deal with that. The bigger you get, obviously, the less spikes you have and the more smooth. And also interesting that you can also rely on a certain amount of energy all year around. So there will be always some wind blowing somewhere in a larger place. So this is the simulation. I think we all understand that very well. And that's why it's important to have a larger market, not to try to keep it small. And I wanted to give you a little bit of flavor also with real data. So we have a tool in our association. We monitor generation across Europe. I just took an example of a day in December last year. And I wanted to show you a small country like Belgium with a very little generation of wind. You can see a lot of spikes on generation, yeah, over day. We're talking about less than 1 giga capacity in Belgium, yeah? So you have a strong changes in the system that oblige you to also to correct the system. The TSO needs to operate and obviously has a strong risk of price changes. If you go to also a slightly bigger country, like Portugal, with more than double of the capacity, then you see there is also strong changes, but they are much more smooth over time, yeah, because you have a larger geographical area. And I guess you can get the story I'm trying to get at, but if you look at the UK, for instance, 6 gigas of installed capacity, then you see again, there is some volatility. And in this case, you are having less and less wind over the day, yeah? If you look at Germany, on the other hand, you have the same trend, but the reverse. So you think, well, what if I connect these two markets, or all these markets in Central Europe, you have a much flatter profile of wind, which is quite interesting, and also importantly that you can rely on it for most of the time. If you hold the whole Europe, then that's your pattern. So I think that's why it's quite important for the wind industry to have such a interconnected market where you actually can trade, but today we can trade, but that you also have the infrastructure available for the trading to happen, because most of the time this trading is affected negatively by the lack of interconnection capacity. So we do these kind of things all the time, and if you're interested, this is the profile for wind generation across Europe for a full year, and you can have a look for any year, for any date, and so it's quite interesting. So as we say, the wind is always blowing somewhere in Europe, right? So just get connected. Sorry, I'm gonna move on. So shorter products. Okay, so in most of the cases you have 1 hour products for the day ahead market, but also if you go into the intraday market, you have in some cases half an hour products, 15 minutes products, or different type of products. But I guess the main message here is that the steeper your profile in the system is gonna be, and this is the case of production of solar in Germany a couple of years ago, shorter products will be much better fit for estimating your position and to avoid ending into a larger variations and having to pay for imbalances and so on. So I think it is quite clear proposal from our side. We would like to see shorter products. Also here I took an example for balancing. Yeah, these are secondary reserve downwards. Basically what you see here is the red shape is basically what the TSO, the system operator, is procuring. So they procure this shape of a product where you need to ramp down your production for 15 or 20 minutes for a minimum of time. So you need to have that profile for a minimum of time, and then you have to ramp up again. But in reality, the only thing they are interested in is the green part. They just want to reduce the power quickly for a limited number of time. But why do they procure the red one? Is because this is basically the technology they have available today, which is, it can be a nuclear, it can be thermal, coal, gas, whatever. So they procure it thinking on the technology rather than thinking on their needs. And obviously with the uptake of when the uptake of batteries, solar, wind, and all these technologies which are much faster, you could start thinking about how to design your products in a much smarter way, yeah? At least it will be cheaper for consumers because consumers have to pay all the energy delivery during that time, while the need is much smaller. And here you have an example of a real case example of a wind farm in offshore in the UK, where you can see that they produce this downward capability quite accurate time and for a very short time of period. Then the question will be, as you were mentioning it before, is it worth having wind curtail or dispatch down while you are still running gas or coal or nuclear? That's maybe a different question, but the capability is here, and you need to design the market in a way that these products can also have a fair chance of competing. And finally, I'm going to talk about very quickly on pricing. So a reminder of the design of the intraday market, as I already explained before. And what you can see here is the amount of energy traded in the intraday market. Yeah, what you can see these bars here. So this is the day before, the day at 3 o'clock. You have the Apex intraday auction, the 15 minutes. It just happens one for 96 products in the day after. Yeah. The other ones, the other yellows, you have in Italy at 3 and 4, and then you have at 7 o'clock in the afternoon in Spain and Portugal. You have one in the day before, and then during the day you have several auctions. Yeah. And then Germany, because combines an auction and also continuous trading, so they have an auction at 3 o'clock the day before, and then the rest they do it in continuous trading. So you can see it throughout the day in green. Basically, what happens is that most of the traders, maybe you can contribute on that, but they like to trade a lot already when the gate opens. So the moment you open, they would like to trade a lot of volume. You can see it here. So we're thinking that if you harmonize the timing at which you open the gates in different countries, you have much more liquidity at the same time. And it's very good because it gives you a much better price signal for all the people trading. I will assume you will have lower prices overall. So there are a number of things which I don't see them very complex, that if you do them in a proper way, you can optimize the trading across Europe. So one other recommendation from our side. So to finalize, these are our 4 principles, as I already gave you a number of examples. So make it faster so that we can correct our deviations close to real time. Make it larger so that you can benefit from the variable resources across Europe. Dedicate shorter products which are reflecting the system needs and not just the technology available today. And create an environment where you can improve and optimize the pricing, combining auctions and continuous trading to ensure that you have a better trade and use of renewables. Thank you. One last thing, because you mentioned the PPAs as well. So we are doing an event in cooperation with some of our partners here. It's in 2 weeks in Amsterdam. So if you are interested to talk about corporate power purchase agreements, we will be meeting there. It will be very interesting 2 days event. So you're very welcome to come. Yeah.
Thank you. Do we have any questions? I see Tim bursting with a question.
Hi, Daniel. I have a question. In your suggestion to combine intraday trading with multiple countries, rules need to be changed. Regulation needs to be changed. If you would estimate the duration of those changes, when would you think this can be done? Because in my point of view, you're actually right. It's quite necessary as well to reduce the volatility in the market, which is good for some people, but also bad for a lot of other people, and sometimes not good for us either. So, but how many years or months or hopefully weeks can we expect, or should we expect?
It's a good question. I mean, we've experienced the XBit platform, which is integrating all the intraday markets across Europe, and this is taking quite a long time. I don't know if it's been a 3 years project or more, and it's been delayed for a year. So this takes a lot of time. And by the way, they are harmonizing intraday trading across the border at 1 hour get closer time, which I forgot to mention. But if you look at the status today at national level, many of the countries already have half an hour get closer time. So. And there was a slide which I didn't explain, but most of the trading happens closer, as closer to the real time as possible. So what happened is that many of the people don't trade cross-border because they still have half an hour to be closer to real time to reduce the forecast, and eventually they keep all their volume in the national market. And I think this is a malfunctioning because so ideally you will have a cross-border get closer time closer to 30 minutes, and everyone at national level will have the same time, so that will be standardized. But on your question, how much it takes, we are working on balancing at the moment, the European balancing guidelines, which was proposed, I think, in 2014. It was approved 2016. Now we are on the implementation, different platforms, different products. No, the implementation will happen in 2021, and then countries have exemptions for or derogations, 3-4 years extra. So we're talking about a target model or a vision that you have for a market arrangement. Maybe it takes 10 years from the concept until the real implementation. So it's a very long term. By 2025, we will have a completely different system, different technology, different way of looking at things, and the model will be already outdated, I'm sure. But yeah.
So I have a question for you, Daniel. Is there a plan for Southeastern Europe to make to turn those into intraday markets? Is there actually a plan, or is it just red and staying red?
No, it's, I don't know for all the countries, but we had a discussion with the Greek regulator 2 weeks ago. They came to see us to understand how the intraday market are organized in different countries, and they want to introduce one themselves. So they were asking us, what do we do? Do we auctions? At what time? Do we do continuous trading? What do you want? They were asking us. So I think they are planning to do that. I don't know when it will come, but it's coming in Greece.
So
and
I guess
some other countries will follow. Yeah.
Great. So I guess you showed them your 4 principles and said, "There's the answer."
Sorry?
You showed them the 4 principles and said, "There's the answer."
Yes, of course. We gave that paper as well.
Do it that way,
Yes.
and all will be well.
Of course, that's our job. Yeah.
So, do we have any other questions? Yes, we do. Thanks.
Hi, thank you. I'm Henrik from Likon. And I have one more question in respect of this European integration. Don't you think that the limiting factor is mainly the available transfer capacity between the countries?
Yes, that's also another point that I didn't mention, but of course the intraday is very much limited on the available transmission capacity. And normally what happens today is that the capacity is allocated before the day ahead market. So you define how much capacity is available, and then you allocate it on the market parties. Whatever is left is given to the intraday market. And what we are advocating for will be like a recalculation of all the transmission available closer to real time. Because it's true. And today, the regulators come with a national report, a European report every year. And what they keep on saying is that the capacity of the grid is not being utilized. We're talking about 20-30% utilization rate from the thermal available capacity to what is actually being used. So I think there is a huge room for improvement. We have a lot of talks about utilities digitalizing and improving smart grids and so on. I think today we are still very far. And if you look at how grid, which is very sophisticated, but still, if you look at how TSOs are managing the grid, there's a lot of estimations and calculation, and there is very little information of what actually is happening on the grid, on the real time. So they don't know, and they just out of probabilistic exercises, which of course you have a lot of risk, and then there are big margins. So a lot of the capacity is actually not being used, but it's kept for security. So I think that we have a lot of infrastructure we should better optimize. Yeah.
So, any more questions? I'm looking around. No? Okay, so thanks very much, Daniel. Marvellous. Thanks to the 3 presenters we've had. I appreciate it very much. So we're going to take a break now. We're going to be back here at 4 o'clock. Your seats will be kept for you. They'll be there. So, and by the way, I've heard that, it's very disappointing next door. So, it's just not worth it. I'll see you at 4 o'clock and we'll carry on then. Thanks very much. So, ladies and gentlemen, thank you for coming back. I knew you recognised that the quality is here. It's excellent. Thanks for coming back. So, I'm going to hand over in a moment to Henrik, who's from a company called Likrom, who operates out of Germany and is going to be talking to us about some software. He's a software provider, MD of the company. And Henrik, please, over to you.
Thank you very much, Gavin. Yes, I'm Henrik Pinov from Likron. Thank you very much for being here and spending your time. Actually, automatic trading with algorithms has been a hot topic in short-term intraday trading already for a few years. And in my talk today, I want to address how automatic trading with algorithms can be used in intraday trading to optimize physical assets, be it a renewable portfolio or be it a flexible plant like a gas plant or hydropower. And yeah, actually this process I call self-trading power plant. Yeah, at the beginning, I have to present, yeah, a little bit who is Likron. Yeah, as Gavin already mentioned, we are actually a software company. But we as a software company, we are 100% focused on short-term power trading. That means all of our staff, so all our co-workers and employees, they have either a strong background in trading, in power or in financial markets, or they were analysts formerly, or they work as analysts and price forecasts, or they are IT developers who used to work in fast trading environments. And yeah, with this staff, I think we believe that we were one of the first who developed a market-ready automatic trading system. And this is why actually we were the first who were listed as an independent software vendor for automatic trading at EPEX already in 2014. Actually, since then, we rolled out this machine already for a lot of customers, and the trading volumes, so all volume in the intraday market that was touched by any of our algorithms amounts increased then steadily to 9 terawatt hours in 2017 and currently up to 30 gigawatt hours per day in 2018. That corresponds to almost 20% of the total intraday volume at EPEX, at least in Germany. Yeah, what are our customers? Our customer spectrum ranges from very large trading desks of big utilities, which use our machine as to discharge trader from the heavy workloads over small and mid-sized energy suppliers who don't have a large trading desk and want to use automation in order to optimize the assets. And up to, for instance, direct marketers who are companies who have also some risk appetite and who have to market large renewable energy portfolios. This is just our list of references. Only what I want to mention is all these customers that are listed here are actually customers that are using automatic trading. So it's more than 20. the reason why we are talking about intraday trading is that obviously it becomes more and more important. That shows here the orange curve. So it shows that the intraday turnover increased over the years steadily. And what is interesting, in the same time, the need for control energy steadily decreased. I mean, this figure does not necessarily mean that it will continue like this. But anyway, the intraday will steadily become more important. Maybe with a new price regime for control energy, and in Germany, it's not sure that this curve here will continue to decrease. Okay, yeah, that's the intraday trading. So this curve also this curve tells us, of course, that although we have more and more feed-in from fluctuating renewable energies, the need for control energy decreased, and we strongly believe that this is obviously a success story of the intraday market. And so that's the reason why it's interesting to deal with this market. Coming back to our market share, I already mentioned that our market share in the intraday market continuously increased over the years, which is shown by this curve once again. And I now want to spend some time on discussing the characteristics of the intraday market today. And from the curves that I showed already, it's obvious that volumes become more and more. I mean, we have high volatility in the market due to fluctuations in renewable feed-ins. And it's obviously a fast market. It was already mentioned that the lead times to deliveries, they shorten more and more. Also, what was already discussed by Daniel, that's from the regulation, there are coming more and more products in the markets. Formerly, we traded only hours. Now we have to trade quarter hours in Germany and half hours in France. And some claim for even for 5 minutes products, which are all arguments to automate this business. What is common in intraday trading is a 24/7 shift, because power is always produced and always consumed. So it's obvious that we need a 24/7 shift. Actually, automatic trading is possible only since a few years, since 2012, since there's a programmatic interface available to access the EPEX matching platform. Also, the other markets like Nord Pool, they come more and more in competition with EPEX, and there's more and more market integration. I mean, the XBIT project has already been mentioned. In XBIT, it's about a shared European order book, where actually a market participant from Norway may trades with somebody in Portugal, if there is transmission capacity available. More and more market areas are integrated into or harmonized in one market. What is now upcoming at EPEX is UK integration, and all this actually makes trading more complex, faster. And what is special about intraday trading, that it has a high information density. So there's always new information that is relevant for the market is coming in, and it has to be processed. And actually, these processes are repetitive workflows. What's anyway important for this market, the market is mainly fundamental driven, and there's a lot of data available. And if you are able to process all these data and create your models, you're also able to create automatic forecasts and to trade automatically on these forecasts. So to summarize, one can say this short-term trading becomes more and more complex. The individual trader is charged with more and more tasks, and due to the automation possibilities, it's possible to automate some trading processes in order to discharge traders or to enable new profit opportunities. I want to shortly mention some points that are important to consider when one is trading, when one is setting up an automatic trading system. And in principle, there are two goals that have to be achieved. On the one hand, one needs really dependable process automation of the intraday trading, and that means one needs a system that is really a system that is stable. A system that is resilient and secure. And on the other hand, when you let certain algorithms running your business, so trading for you want the algorithms to provide some reliable and good execution performance. And how is it in principle done? It can be set up by, on the one hand, you need a stable trading platform that guarantees some resilience, system security, risk management, all reporting, which is maybe also that enables you that is traceable. So all trading activities shall be traceable. Maybe you even want to have some audit trail, and and you want to be conform with all necessary interfaces. For instance, your system shall be adaptable to common systems like ComTrader or whatever. And on the other hand, on top of this stable service, you need the algorithms. So the algorithms must be performing. They must be flexible, and there shall be the possibility to individually parameterize them, making them aggressive or more passive. Taking more risk or whatever. The key features of all these execution algorithms in the intraday market is that one has to optimize somehow between passive execution, so by floating, and aggressive execution. I want to get a little bit in more detail. Actually, what is shown here is once again this platform, which is made up of two components. One is, in principle, the platform itself, which I already mentioned, that has access to all relevant markets, which is now currently mainly EPEX and Nord Pool. What's also coming up are regional markets. I mentioned here this ENIRA project, which is a project, which is a kind of pilot project where one wants to find a market solution for congestion management. What is here also important is, this is a specialty for Switzerland, is the ICS, intraday capacity service. This is because after XBIT, Switzerland is decoupled from the usual XBIT market, and trading is then only possible if you simultaneously nominate the transmission capacities. So if you want to enable automatic trading, it's not enough to trade in France or Germany, but you also have to automatically book the transmission capacities. What is currently also coming up is gas market. So there's a need for automatic trading in the gas market, which requires to connect also to Trayport platforms. That's the market access by API. What the platform needs is, I mentioned already, security, data security, resilience, so stability of the processes. If there's an outage, you want to be informed. Risk management, so you want to have some integrated limit system. So if anything is running, I don't know, if out of control, so amok, then you want to have some internal limits that prevent the system to go unlimited into risk. Then you want to have extensive reporting features. Reporting is first on KPIs like cost versus VWAP, cost versus spot, whatever. And and maybe you want to have something like audit trail. So everything that an algo machine is doing, you want to have traceable. Then a platform also should have some netting and internal market. You don't want to bring everything to the exchange. And last but not least, you need several interfaces. Maybe you want to talk to the machine via an API. So you want to control from outside what the algorithm shall do. Maybe you want to change parameterizations, making them more aggressive or more passive. Or you want to tell the algorithm it now immediately shall execute something. Okay, then you have, of course, usual interfaces like SFTP to import orders and get trades. And of course, you also want to, you always want to be able also to look at it, what it's doing. And for that, you of course have a GUI, which looks similar to ComTrader, and but also enables you to launch algorithms and to parameterize them, and so on and so on. And so yes, that's the basis. And on top of this basis, in order to run really algorithmic trading, you need the quantitative trading strategies. And well, on the one hand, you of course want to provide some inbuilt algorithms that enable you to run already the main tasks. Then you want to enable the customers to create their own algos. And finally, you have some customers that need some special modules that are modules that are actually specialized on certain portfolios, like, for instance, a renewable portfolio, or or a flexible power plant like a gas plant, which has certain technical constraints like ramps. And what is special here is that the individual contracts cannot be traded independently, but they are somewhat connected to each other. And finally, what is also important for the algo trading is to have price forecasts. I come back to the price forecast when I turn to an application, and such a setup can then be used by various kinds of customers. One kind of customers are the really large trading desks of big utilities. And what do they want to do? They have a lot to do. They are often active on several markets. They have very complex portfolios, not only consisting in renewables, but on many kinds of flexibility. They have to deal with significant outages and so on and so on. And such trading desks tend to use such a machine as a trading assistant in order to discharge their traders. And of course, they want to be able to create their own algorithms, so in order to have complete control on the system. Then we have small and mid-sized energy suppliers who usually don't have a large trading desk, but only a few persons who have to do the optimization in parallel to many other tasks. And such customers they tend to ask for really specialized, what we call execution satellites, which are specialized to optimize certain assets like a gas plant or a hydro plant or whatever. And finally, we have typically direct marketers or companies who are specialized in direct marketing. They also have some risk appetite. And of course, in this direct marketing business, everything is about forecasts. First about what is my open position, and then what is the rest of the market doing. And this is why you need these forecasts. And for them, it's often very interesting to get support in getting a market view. Just as an intermediate slide, I want to show here how the front end of such a system looks like. It looks like a usual trading system with order books, own orders, trades, messages. What is special here is you can, on the one hand, trade manually, as usually, also with ComTrader of EPEX, but you here can parameterize your own algorithms and initiate them here and observe performance of these algorithms. Now I want to come to the most important part of my talk. I want here to outline how a self-trading power plant setup may look alike. And here the first example is a renewable energy portfolio consisting mainly of fluctuating feed-in assets like solar and wind. And important part is of course here a virtual power plant to control everything, feed-in prognosis, and important know-how of the direct marketers, of course, is meter prognosis, so its own view on his production. So he will usually not simply buy something from a forecast provider. So from this meter prognosis, he then gets a continuous update of his open position. And what's this execution satellite that I mentioned on the previous slide, which is actually some sort of module of the whole execution service. it helps to decide what to do with the open position. And in this decision of what enters into this decision is of course a forecast on the market. Yeah, maybe you know in direct market of renewables, it's all about imbalance forecast, also intraday forecast, but imbalance even more. And from this you may decide whether to trade a position, an open position, to close an open position more quickly or later, or keep it even open, and so on. And yeah, this satellite then communicates with the execution service. So the execution service mainly executes an open position, and according, with the help of certain parameterizations and so on, and being covered by risk management and so on, what I all mentioned, and yeah, I mean that's a fully automatic process, and of course not in all situations a direct marketer will let it run by the machine. I mean, you know that there are critical weather situations where where there's special emphasis on this meta prognosis. So you always have to look at what the system is doing. And at the end, what here matters in this business are the costs versus spot of the netted intraday balancing volume. Do I have a little bit more? So already. So a similar setup is here possible for flexibility. The difference to direct marketing is that the forecast here is it's here more on volatility. It's not about the direction of the market movement, because with flexibility, I can sell beyond a certain beyond certain marginal cost, and I can also buy back. And what is here important is that one usually has some technical constraints that are dealt with, and the asset optimization of this portfolio considers them. And what one wants as a trader, what one loves to have a merit order where you can trade along, selling if prices increase, buying back if they go down. And here it's mainly about volatility, and but often it's not simple like that you have simply a merit order for each underlying, but it's also about technical constraints. For a relatively simple application might be a gas plant. Sorry, just 2 minutes. A gas plant where you have to consider ramps. So maybe you have 100 megawatts of free capacity, but you can increase the performance of the plant only by 15 megawatts per 50 minutes, and so on. And what is here now interesting is how to measure performance. Of course, in such when it comes to optimizing flexibility, it's not simply the cost versus VWAP. I made here a suggestion how to more effectively measure the performance. You have a certain marginal costs which are marked here. And only after crossing these marginal costs, you're willing to sell your capacity. And actually what counts is a VWAP of all trades that are above the marginal costs. And actually it's not easy to outperform this VWAP. Because actually I mean, to earn some money with flexibility is maybe not, it's maybe easy, because you need to wait until some marginal costs are crossed. But what's difficult is really to get the full performance out of this. And yeah, and the important point is here of definitely not to show your the full available capacity too early. Yeah, and if you then look at P&L, actually in the intraday market, the volatility is relative. Yeah, prices are rapidly changing, but in principle, you have a relatively steady level of volatility, so that the P&L curve is more or less linearly increasing. As long as you consider some flexibility that is always at the money in the spot market. Sorry, my talk was a little bit technical about trading, but I think it's important to consider how these automatic trading ideas can be applied to optimizing flexibility in this market. I mean, what is shown here is the P&L curve for optimizing hourly contracts, and what is much more profitable is optimizing in quarterly products. And actually the situation that is considered here is a kind of abstract plant where you have some capacity which is at the marginal cost in the spot market. And actually this is a situation where flexibility earns the most in the intraday market. Because I mean, if you're already in the money in the spot market, you would have sold your capacity already, so you won't earn anything in the intraday market. Only if the market goes down. Okay, that's not important anymore. Thank you for listening.
Henrik, thank you very much. We ran a few minutes over there, but it's not a problem. We've got time. So I'm going to come in with a question. You know, back office manager for 15 years. I like control. I like to know what's going on. What happens if I have automated trading and it stops? It crashes. You said it needs to be consistent. You said it needs to be robust. Absolutely.
Yeah, okay.
But
okay, yeah.
what happens? You know, what happens if it isn't? Do I have to call people in, 100 traders in to do what this was doing, or what happens?
I mean, if you have a crash of the system, I mean, usually a situation that can happen is that simply the exchange crashes, and in this situation, another situation is that maybe the system causes some errors. But of course, part of the system setup is, of course, that you are informed about outages, and it's mainly, well, in our experience, it's mainly about outages of the exchange, and it's of course due to the software setup. I mean, there's an extensive logging, so a lot of error controlling, and all this is necessary to provide a stable system.
Okay,
I mean,
an
air plant is guided by some software as well, and of course it needs.
Okay.
You want to have a software that's stable and without bugs and.
Yep. Okay. We have a question over here from Tim, I think. Oh. Have an ice bucket.
Hi, Henrik. Tim speaking, Priogen. I have a question on the accuracy rate. Is it possible to tell us a bit more on the accuracy rate? Is there an accuracy rate, or can it be measured at all about the system or on the forecasts? How many times are you right?
It's about forecast Okay, there are different aspects. One is execution. I mean, execution is of course systematically backtested in a backtest environment. So we started our business in collecting the whole order book history, and of course what we do is to backtest the algorithms along this history. And what one typically considers is some generic trading tasks like, let's say, selling and buying 100 megawatts and without limits. And in principle, these algorithms manage to outperform the VWAP by a few cents. So this is about the stability of the execution. And then when it comes to more prop strategies based on, say, imbalance forecast, and we measure this mainly in P&L, in euros per megawatt hour, and it's definitely a P&L.
Okay, no, fine.
We can discuss it in a more bilateral.
No, fine. Okay. Good, thank you.
Okay, thanks very much, Henrik. I think we're going to need to pull it to a halt there because I think this could go on all day and we need to move on to the other ones. But thanks very much for your input.
Okay.
And Emmanuel. So Emmanuel Lusson has joined me on the stage here from Enedis, the French distribution company, enabling local flexibility. Let me, that's it. And Emmanuel, over to you.
Well, good afternoon, everybody. Just probably not useful to comment this slide, but just to recall you, Enedis is a French DSO which operates only low voltage and medium voltage network almost all over France, 95% of the French territory. I will probably read my text. I'm sorry for that, but it's easier for me and it's probably better for you. You might find my talk very different of other presentations during this session. In fact, Enedis has only a regulated activity far from trading, but there is an explanation. I will speak about local market, local electricity market. It's quite a different issue than the trading subject we have seen before. But at Enedis, there is a strong will for more local approaches. We are convinced of that in Enedis. And we need to build appropriate frameworks to answer to this aspiration. What is a local market? There are more and more discussion about local electricity market. However, to this day, there is no precise definition of what a local market is. Behind these terms, some think about very different reality. Some speak about what we call in France collective self-consumption operation. Others speak of a local electricity community with the involvement of citizens and local stakeholders. It may even come to private or closed networks or microgrids. Today, I'm going to speak mainly about flexibilities connected to low voltage or medium voltage network and how you can use this flexibility for the networks. Just I will quick on this slide, just to remind that the energy transition and digital transformation has major impact on the activities of DSO, particularly network planning and operation. It's useful to recall that energy transition takes place first and foremost on the distribution networks. In France, for instance, 95% of the new renewable energy production are connected at the distribution level. Moreover, new electricity uses, electric vehicle charging, for instance, also occurs at distribution levels. This distributed energy and new uses will increase the need for local flexibility to efficiently operate networks. Besides, new sources of demand-side flexibility are almost always connected to distribution network. these developments lead us in Enedis to consider more local approaches to network optimization and operation. This is what I am going to talk about today, showing in the first part how Enedis currently facilitates the access of distributed flexibility to market mechanisms. In the second part, I will present how Enedis use and prepares the use of the flexibility to support the network, to optimize planning or operation of the network. First, it's the case in French, but it's the case also almost everywhere in Europe. French market mechanism tools have changed significantly in the last few years to allow to all distributed generation to participate to market mechanisms. It was not the case a few years ago. I'm sorry. When I speak about market mechanisms, I speak obviously of balancing mechanisms, market for ancillary services, also the demand-side response market, whose French name is NEBEF, but also more recent capacity mechanisms in France. So Enedis is strongly committed to its change by contributing to the evolution of this role to make it possible, and also by exerting an operational role on a daily basis. This slide details some of these operational roles. Without being exhaustive, I'd like to mention, for instance, the balancing and capacity mechanism for which Enedis upstream have a role to certificate and manage market players' perimeters, aggregators for demand-side response or renewable energy sources. Near real-time role of Enedis is to prevent network constraint from happening. And after the activation, the role is to control and supply the TSO with added value data, mainly metering data, in order to measure and control action giving right to payment. I can also mention the achievement control for demand-side response activation. Enedis has developed and proposed appropriate statistical methods for small sites with representative consumer panels, for which load curve telemetering is now possible at a large scale. The roll-up of Linky meters now allows this on a large scale. Linky also allows suppliers to develop new innovative offers, including mobile pack periods, managed near real time. I will not describe all the slides, but I imagine you can, if you are interested, you can get the slide after. The second part is Enedis is also strongly committed to using local flexibility for the specific needs of the network. These are mainly cases where the localized use of flexibility would either delay or even avoid expensive reinforcement of the network, and where they would limit or avoid outage in event of network plan works or incidents. On this subject, I would like first to mention a particularly relevant report, Smart Grid Economic Assessment Report, which has been published by the French DSOs with the cooperation of RTE, French TSO, and the ADEME, the French Environment and Energy Saving Agency. This report is available on Enedis website. In French, I'm afraid. There is only an executive meeting translated in English.
I think as it's in France, that's reasonable, actually.
As this report concludes that the community value for local flexibility for DSO needs is potentially large, but necessarily very local. In particular, the value is zero in the majority of cases where no structural constraint exists on the network, but this value can become potentially very important when constraints appear or exist. I also want to mention an article of a French law, a 2015 law on energy transition. This article gave a first experimental legal frameworks for use of local flexibility, specifically to serve the needs of the distribution network. For this reason, Enedis has developed a proactive approach towards potential project developers. This approach consists first of all in publishing documents describing technical economic conditions as well as contractual frameworks. Enedis then engage in an active search for first experiments where network constraints appear. To this date, there are leads but no contracted case. However, we are confident that they will eventually succeed. To prepare the future, Enedis is also involved in many demonstrators or local projects that explore innovative schemes. You will find some on these schemes, if it is visible for you. Smart Grid Vendée, which explores the use of flexibility for DSO needs and the coordination between TSO and DSO about this use of flexibility. Interflex Nice Smart Valley is a project to explore aggregator web interface and a third-party platform. I haven't any time today to describe all this project, but I would like just to mention Nice Smart Valley. This French demonstrator is a part of the European project Interflex, which has a demonstration somewhere in this room. This slide lists the focus area of the project, Nice Smart Valley. It goes from electric vehicle to demand response, even grid automation, energy storage, etc. For this project, 2 platforms have been developed to facilitate the emergence and use of flexibility. A platform for flexibilities aggregator and a platform open to third party. If you are interested, you will find more detail about this platform on the 2 following slides, 10 and 11. Not to be too longer, I just mentioned that the final objective is to facilitate matchmaking between flexibilities offers and flexibility needs. As I said in my introduction, there is a real aspiration for more local approaches in electricity market. And for Enedis, we think it is very important to work on this subject to prepare the future. I would like to stress that in terms of local market flexibility, nothing is defined yet, and everything or almost everything is to be discovered and challenged. To this day, there is no set market design for local flexibility. We have not enough vision for a clear value of local flexibility and uses. It's more a future subject than a reality now. And there is no significant operational benchmark on European level, except for a few experiments. At this stage, we think all the options must be left open. Consequently, Enedis takes place and manages demonstrator so as to assess the pros and cons of each solution. Stakeholders can that way offer innovative flexibility, and Enedis can test using flexibility to lift constraints and postpone investment in real-life conditions. In addition to these demonstrators, Enedis initiate prospective talks with Apex Spot, our neighbors, as a market operator, just to see if market tools could be an helping solution in the future. And we also initiate a discussion with all market players to both assess their offer and their needs. Thank you for your attention.
So thanks very much, Manuel. Do we have any questions around? So all is there up for grabs. Challenge, challenge, challenge. Questions?
Yeah. So, what do you think about? So, uh, okay.
I'm sorry.
Yes. Okay. Yeah. So, what do you think about the blockchain technologies in the current situation that you have? It seems like very suitable, but it also has least amount of controls.
We haven't worked a lot about this subject. We are just identifying as a solution possible to make the exchange possible. So we are in discussion at this stage with RTE to begin a new demonstrators in which blockchain could be tested. But at this stage, we are open.
Sorry about that. Any other questions? No. Thanks very much. Thank you, Emmanuel. Yes. So perhaps I could ask those who are on the panel to come and join me up here, please. Come and have a seat. So we need these. Do we have any more for the others? Or,
I have only 2 handhelds.
Okay, so we'll use the 2. We'll use the ice box. We'll that's it. Okay.
So you have to share it. I have only 2. Or you can
Come and join us. Yeah. Come and have a seat on the end. So. Okay. Let's just chuck that down there. So, ladies and gentlemen, we're going to move on now into a panel discussion. We're going to be talking about markets, and I'm going to start off actually in a moment by asking Harry to say a few words. But what we've seen recently is that, well, for a long time, markets were pretty quiet, weren't they? Are the markets pretty quiet at the moment? I don't think they are. Things changed. So what's going on? Is it a blip? Is this the new norm that we've moved into? What changed things? Harry's the man with all the answers. Well, some of them anyway. It's all right. And then, and I'm also. We heard earlier on from Regina about emissions prices and renewables, and the fact that they've become a significant part of maybe of what's going on. Oil. Well, perhaps oil has diminished in importance. Is that true? Is that the new norm? And also artificial intelligence, more and more in trading. How is it impacting our markets? So Harry, if you'd like to just give us a few thoughts, and then we're going to chuck that around between us and see what happens. Okay?
Yeah. Thanks, Gavin. Like as you said, as we have saw from the various presentations, we are going through what I quite like when we come into this exhibition, at the gate, at the entrance, it says energy revolution. I thought there's no better way to describe this, really. We are going through a revolution. When we talk about revolution, what does come to your mind? I think in the minds of most people is probably words like chaos, unpredictability, and for a trader, it really means volatility, which can be both good and bad. Obviously, it can be a risk, but also can be opportunity um, for making money as well. So what we have saw today from the presentations, what's contributing to the increased volatilities. We've seen the new regulations are being introduced. We've seen new ways of trading, new market players, the angle traders coming in, like Team. We've seen the technology development, Henrik's team is developing new tools to help traders to make quicker, faster, more accurate decisions, which means the market is changing, because the market players are reacting faster to developments in the market. By its nature, you will see more volatility, particularly in the very prompt of the market. And that's where players like teams see the opportunity. But we also see a lot different drivers, market drivers coming in as well. For example, this time last year, most people here probably wouldn't even be talking about emission prices. But this year, we've seen in our markets, emission price a lot of times is driving everything. Everything was just following emission prices for no reason. A year or 2 years ago, it might be oil price, it might be power price. Well, this year, a lot of times it was emission. And what we have also seen so far is, I think one of the biggest contributor to the volatility and the unpredictability is weather. I think because partly this is debatable, maybe controversial. My view is partly because climate change, weather is becoming more unpredictable, even though we heard from Tim and others, the technology for forecasting weather is getting much, much better. It's better by the day, but that may be true for short-term forecasting. I think for long-range forecasting, weather is probably becoming more and more difficult to forecast. Hence, we have the events this year like the Beast from the East, which obviously caused some of the market prices to spike. And those are the factors which is really, really shaping the market. And on top of all this, you have technological developments, you have artificial intelligence, people are experimenting with those new tools, new technology, which is going to have an impact. And when you hear Henrik saying his software is taking 20% of market share on EPEX, that's not the same market which we were trading 5 or 10 years ago. And therefore, as a trader, you need to take all those things into account when you look at the markets, when you make your trading decisions. I think I'll probably stop there for time.
Thanks, Harry. So if I can pass over to Regina. So I'm hearing that green certificates it's all to do with you because you talked about green certificates. So or at least it's not all. But what I was picking up there is, well, actually, this volatility and so on, maybe this is the new norm. Do you see it that way?
Yes, let's say in electricity, I think yes, of course. And it's simply due to the fact that we have more renewable production, which is more of renewable production. And at the same time, we have also new laws adapting. We have grid codes, we have a CACAM, we are discussing right now the balancing code. So it means we are more or less arbitrating between day ahead, intraday, and all the balancing powers. Tertiary reserve, secondary reserve. Also this is, as we have also heard from NEDs, there are now platforms. There are now, in our case, there is a TSO asking for these services. So this is simply a business which is coming more and more. And while, let's say, balancing energy in the past was sold in Austria even on a yearly base, then monthly base, then weekly base, now we'll have it every 4 hours. So the time slots are coming closer and closer. And of course, we are reaching, and here we come to what Harry has said before, we come also to a limit where people can work, where you cannot have so many intraday traders, especially because the quantities are also getting smaller and smaller. So of course you get into this part where you also are using machines. And in fact, if I talk to our head of trading, who is also responsible for the intraday trading, he said sometimes during weekends and nights, he's always talking about the dance of the ghosts because he said the prices are more or less just done by different machines trading against each other. So of course this is already today reality. Let's say in our case, it's not the normal trade, it's just the short term, the shortest term trade. But I think it's simply the development. And maybe in this case, we are moving to this, let's say, artificial intelligence and the people just adjusting it and making it better or different to avoid the 20% of one technology is traded on one exchange, but to be a little bit different, or the reason why there are 7 metrologists, you told, so to not to be reliant to one company who is supplying 50% of the market. So I think, this is the changings in the market, but of course, underlying, to coming back to your questions from the beginning, underlying is simply the wish and also the political wish to have more renewables in the market, and also simply the let's say, even higher political idea to become independent. As Europe, not to be independent from oil producing, gas producing countries, but survive on its own. And starting from this, let's say, very high political strategy, we're going lower, lower, lower into our own trading reality.
And seeing the effects. I'm the dance of the ghosts. That's something I haven't heard before, but I'm going to remember it, and I might come back because I have a feeling you're partly responsible for the ghost dancing. But I'm going to move on to you, if I may, Daniel, because Regina was talking about periods and the number of periods shrinking in some the period for the gate shortening in some places, and these were things that you were, I think, calling for. So I'm looking for blame at the moment, and I started with Regina. Now I've come to you.
Okay.
Is it all your fault?
Definitely not, but it's actually one of the things I wanted to mention because I heard many times already the volatility and whether this is bad or not. You were asking?
Yeah.
I personally don't see anything bad on having price volatility. That's normal, and that leads to innovation. And it's many people already say this leads to some challenges, but opportunities. So there will be new business model, and technology will catch up quickly. So volatility on the prices, no problem. Then on the weather forecasting you were mentioning as well. I mean, it's still difficult to forecast weather, but we got much better than we were before. And so I'm sure that the technology will continue to improve a lot, and we will be able to forecast much better in the longer terms as well. We will be able to understand the weather much better. You say something about volatilities because there are more renewables in the system. I'm not sure I will agree with that. I mean, volatility is coming from the demand. We have now electric vehicles. We're starting to have electric vehicles. We will have a huge amount in the future in the distribution network, and that will be much more centralized at the local level than we have renewables. And so at the distribution level, the DSO will need to deal with a huge amount of volatility until they get to know how that works, the profiles and so on. So I think it's a much bigger trend, which is not just due to renewables, but it's a wider thing. But again, I don't think that's a problem in itself. Yeah, of course, the system operator will need to deal with much bigger ramps, much sudden ramps. That's why we need to move to shorter periods. But I don't see that a problem either, because now you have new technologies. You have a battery storage, which 5 years ago nobody was believing on it, at least not in such a short term. And now all these technologies provide inertia, provide primary response, secondary. They can do much more. I mean, and there will be new things coming up very soon. So again, I don't see that from a technological point of view any problem. The only thing I see it's a risk For us, is volatility from the political side. I mean, political volatility. And that we see much more in Europe. We are moving to extreme changes. You have retroactive changes from the government, changing policies of they are supporting something, all of a sudden they don't support it anymore. They were having a type of a grid code you were mentioning, and then they want to change it and have a new market design. And I think that can affect because nobody can prepare, and innovation cannot prepare for such a sudden changes. So I think that's something that we should look at. And try to avoid.
Absolutely, and I agree with you that volatility is not always a bad thing. So don't misunderstand me when I was saying that. So Dance of the Ghosts. I think it's all down to you. Is that right? Trading between machines and so on, and very, very high volumes. But
yeah, maybe,
is it bad or good?
Yes, I think it's a natural consequence of this of renewable energies. I think first the intraday market. The intraday market only exists because of renewable energies. I mean, if there were no renewable energies, you need no intraday market. I mean, the volatility, of course, is the reason. The reason for volatility is the fluctuating infeed of renewable energies. I mean, in Germany, we have hours where there are 40 gigawatts of feed-in from solar or wind, or even more, and this corresponds to 40 nuclear power plants. And some other hours, they have maybe 1,000 megawatts of feed-in. This is only one nuclear power plant. So there's a large spread between maximum feed-in and minimum feed-in. So there are always your ideas are coming in the game. Yeah, I mean, then in order to provide a safe energy supply, of course, you need the flexibility. You have the fluctuating feeding, and then you have the flexibility. And in order to be the flexibility or the flexible plants to be profitable, of course, you need volatility. And maybe at the end, Regina, your concern was that one technology is touching 20% of the market share. Maybe this is a point that I somewhat missed in my talk. Actually, the role of the trader has of course changed in the recent times. The trader nowadays is someone who is the new trader is using the machine as as a new colleague. Maybe he's more on concentrating on forecasts and fundamental analysis and so on. And because it's important that the tasks became more versatile and more complex, and that's why you want to have such automatic systems to assist your business, I think. Yeah.
Okay, and maybe I can just move this over to you, Tim. The trading that you do, and you're trading a lot of short-term trading from what you were saying. Clearly, bringing this renewable stuff in and then trading it short-term and trying to shape and so on. You're creating some of this volatility as well. Is that right? Oh, you've got one.
Yeah. Yes and no. No, it's. Let me start at what Harry mentioned in the beginning, and then I'll come to your question. It's indeed a revolution, and I think it's here to stay. We are all part of it, as we've seen with the presentation of Emmanuel. DSOs have to change not only mindset but also processes. They're now gonna do work that they haven't done before yet. They haven't even perhaps thought about it in theory, but now they have to put it into practice, and that's something else. Everyone basically within the entire chain, not only traders or producers, but also DSOs needs to change. And if a DSO needs to change, then revolution is already over the doorstep. It's already in the house, I would say. but yeah, they haven't. Yeah, so it's basically a start of, and we are all part of it, and I think that's a good thing. It also leads to volatility. Absolutely, we all agree that volatility can be good, can be bad. However, for consumers, for individual consumers, volatility is not a good thing because it would increase price risks, and therefore retailers might increase their pricing towards consumers, but also for industrials, yeah, it's a risk, and no one likes risks, basically. And the other thing that also crossed my mind was basically in the past we were trading in a base load environment. Everything, gas plants, coal plants, they're all running base loads. You can ramp them up, you can ramp them down a bit, but just base load. But now these are all, and we're all talking about volatility in prices, in production, in smart grids, where therefore volatility in the consumption side, you need to mitigate that or combine it. So it's basically changing, in my view, from a base load to a profile market. I don't, yeah, just for the lack of a better word, I would say a profile market. And that's something interesting as well, and something new, I think, for everyone.
I was looking at Regina there. Were you looking to say something? I was going to go back to Harry, but
also,
go on.
one of the comments that one of the thoughts that I had on the presentation of Regina is she showed prices of 1 to 2.5 euros per megawatt hours for the guarantees of origin. In the Netherlands, again, I'm Dutch, but in the Netherlands we are now currently seeing prices of 7.5 to 8 euros per megawatt hour. That's more than 10%. That's chunky, I would say, to use some funky terms.
The Dutch origin.
Yeah, it's yeah. A guarantee of origin is a marketable product, and companies are putting it in the Netherlands in the market as you can now buy not only wind energy or wind power, no, Dutch wind power, and consumers are willing to pay for it apparently, because prices are now more than 10% above the retail or above the wholesale market. That's a lot, I would say.
So, so I'm just going to look along. I'm going to, when we come to an end, I'm just going to ask. He doesn't know this, but I'm going to ask Harry to sum up and answer my question. But do any of the rest of us want to make a further comment before I go back to Harry?
I just want to say, have one final remark about volatility. Also about innovation. I think in general, volatility is a good thing. In general, we should welcome innovation. The fact that Henrik's software is taking 20% of the market share shouldn't be a concern, because someone else will saw the same opportunity. And also the fact he's taking more market share means he's introducing more liquidity into the market, which creates more opportunity for others as well. So I think as an industry, perhaps, follow up on what Tim said, higher volatility is probably not so good for consumers. So as an industry, there's a challenge for all of us to come up with more innovative products to make sure consumers are insulated from this high volatility.
Okay, so finally, just looking back at the questions that I had, is this a blip or is this the new norm? I felt we're agreeing that this is the new norm. Is that right?
I think I have to agree to that, because if anything, I think if you think about what drives volatility, basically it's uncertainties. And if you answer it, then if you ask yourself the question, is the world becoming more uncertain? I think the answer is probably yes. The world in the context of our industry, is it becoming more uncertain? I tend to think it is. And if you agree with that view, you would say high volatility is probably going to be here to stay.
And the second point was in terms of emissions prices. So and the Netherlands experience there is an extraordinary one, isn't it? 10%, incredible. So so we're seeing, are we, that people, end customers are prepared to pay for local green product? And that's significant. That is significant.
So I would have one more comment on the volatility topic, if okay. Well, wait, just what I comment on is that, of course, volatility can be very dangerous, and it's of course also by regulation driven. I mean, in Germany, we observed last year a spike in imbalance prices of 23,000 euros. So for 2 quarter hours, and it's obviously a price that can make companies bankrupt in this business. And actually, this was due to a crazy price regime in the control energy market, where actually the working price for flexibility did not play a role in the tender result. And now we switch to another regime where now there's much more emphasis also in this in the working price, which results in more flat merit orders. And yeah, maybe that has now is causing that more control energy is dispatched, because market participants do not care so much about imbalances. So I think it's an important task for regulation, and I think the market always needs a lot of discussions in order to agree on a reasonable regime for these for these mechanisms.
I think that's a very important point, and that's what I tried to illustrate before this morning. I mean, in this happened in Germany because the market for balancing services was not open to everyone. So you do a yearly procurement of capacity, which only a few players can provide, and then only those who are pre-selected or pre-qualified can offer energy into the system. And of course, they can, because they are very few, and they know it very well, they control the prices. Now it's different, now it's open. Now you have renewables can offer, storage, demand response, aggregated virtual power. And so the game has changed, and although the market will allow these prices spikes to happen, it will not happen anymore because you have oversupply of solutions, let's say, or solutions. So I think that's the way to go. I mean, but it takes a lot of time to change all this regulation.
Yeah, I think I tend to agree that when it comes to balancing market, I think it needs to be genuinely market-based. And also the design of the market. We know the designs are quite different across Europe. I think they all need to learn from each other to make sure that some of the inefficiencies of some of the designs are removed. Because, for example, what you described in Germany, I wouldn't think it will happen in some other markets.
It's purely a matter of regulation.
Scary numbers that you were talking about. So I'm happy, I think, to bring this to an end. I think we've covered our topic. I think we've come to a point where we've agreed that things have changed, and the new norm has been established. The new norm is that we're in a different place, and things will continue to change. So, on behalf of you guys, I'd like to thank the panel sitting up here for giving their thoughts, and absolutely the panel and for the talks earlier on. Much appreciated. Thanks very much. And I hope that I'll see you doing something similar to this and finding that prices have changed again in a year's time. Okay. Thanks. Bye.